recording. Then what I'm going to do is going to show a quick presentation just to talk about DueDash, and then from where on we're going to go into the session. Oh, sorry, that was the other one. Just want to show my presentation here. Wonderful.
So Michael, why don't you take a picture? Guys, get your cameras on, take a picture.
People are shy, it seems. But yeah, we can otherwise, yeah, here I see some people. Wonderful, wonderful. Now suddenly I see so many faces here.
It's amazing.
Yeah, don't be shy.
Amazing. Come on, let's get the energy up.
Yeah, great. Peter introduced. So that's wonderful. Yeah, I remember. Peter, it has been some time. I remember when we had the discussion. So here also, Steve, feel free, put this on just here into the chat. I think that's always nice just to get exchanged. And yeah, so let me get started in here. So I'm just gonna share this before I give it then to our host. And let me talk from where on. Great. So welcome everyone. I hope you're already excited for our session on basically on how to build an investable startup. We're gonna have some great questions. We're gonna have Nikki going through this session. But before we do, some of you might already know what DueDash is. Some of you might not. And for that purpose, I just want to give you a very brief introduction. So DueDash actually started with a big issue in mind, which is the fact that most startup founders are not able to actually raise funding and deal with the investors. And it's a difficult process which requires a lot of data and discipline, and it's not something that you can do in a day and just with a pitch deck alone. At the same time, also the investors struggle often on finding the right deals, finding the startups and enabling them to go through that process, and they lose a lot of money and time while they do. Now, that's why we launched DueDash. DueDash is a toolkit that enables startups and investors to connect and collaborate, to actually create qualitative relationships between both sides, so that the startups can scale, build wonderful companies, raise funding, and also the investors are able to back the next unicorns and zebras of tomorrow. If you're not part of DueDash yet and you're a startup or an investor, have a look at DueDash.com. We also do regular demo sessions, and you can write me if you're interested in the link for that. In addition, because that's also important for our topic today, we have noticed many founders actually don't know how to even start. How do I build an investable business? Or even if you're in the process, how do I ensure that my company is ready for fundraising? And how do I ensure that I can answer all the difficult questions, the curveballs that investors throw at me, so that we keep them happy? For that, we launched our Dash to Investability course, a self-guided interactive digital course, which you can go through 5 minutes in a day or 50 minutes, depending on whatever you want to do, to actually ensure that either, let's say you're a startup founder at the beginning, how do I build my business, or just to prepare for all the upcoming investor meetings. We actually have a great offer for you, 90% discount on the course. So we're going to share this into the comments, but also we're going to talk more about this today in the session. Before that, we are also supported by a lot of great partners who believe in us and trust us. And we're looking forward to continue on our journey and helping as many startups and investors to take it further. If you have any questions, you can reach out to me under my email. I will also be part of the session, so you can just write me like a private message if it's not related to the session today. And with that, I would give it to our host, Nikhil Madan. But just, yeah, let me put kind of like a spot on in here. Let me pin him and also our guest. And Nikhil Madan, he is a serial entrepreneur. He's an investor. He himself built multiple businesses. He exited and basically ended the company successfully. He also invested himself into 40 plus startups and screened over 4,000. So he really knows from both sides what the journey is like. So I'm excited for having him, the co-founder and CEO of DueDash, to host the session and then talk more about what we're going to talk about today, and also introduce our guest, Shai Bhadra.
So are we good? Do you hear me well? Just give me a show of hands. Yeah, thank you. Thank you. Thanks for making time for this amazing session, which we're going to. So what I'm going to do is I'm going to divide this session in 2 parts. For the first 35-40 minutes, we're going to put Shali Bhadra on the hot seat learn from him, understand from him what he's doing and what he could potentially do better. And of course, the other 20 minutes we're going to leave for you guys asking him questions, whatever you feel fit. So let me first do the honors. Shali Bhadra is a veteran from the creative communication and audio video industry with over 25 years of experience. And you know what? He's got the benefit of working with a lot of diverse sets of industry segments during his 25 years. And he was a CEO of a leading design and production house in India. But you know what? The most amazing part? He spent more than 20 plus years of working very closely with a respected global leader of the world, Prime Minister of India, Mr. Narendra Modi. And what he tells us is that during this period, he has learned a lot from his interactions with him, closely observing how he works and the marketing strategies surrounding it. Now, Shelly Bhadra has a penchant for innovation and entrepreneurship and was instrumental in diversification of his previous organizations into various domains. Now, that is what Shelly Bhadra is for you. And before I move forward, what I'm going to do is I'm going to briefly talk about his company, which is ABC Talkies. ABC, I mean, how many of you know what Talkies is all about? What is Talkies? Anybody? Put it on the chat. Yes, thank you, Vishal. Thanks for enlightening all of us here. So Talkies in Hindi is a movie theater, and ABC Talkies is probably India's first film tech and a global marketplace. ABC Talkies aims to address the pain points for two major stakeholders of the film industry, the filmmakers and the consumers. And it provides filmmakers with a free hosting and streaming platform dedicated exclusively to films. And of course, this is not big studio films. This is the content creators who would like to monetize. For the viewers who are fatigued by multiple SVOD, you're on Netflix, you're on God knows all sorts of subscriptions you pay. At least I pay Netflix, I pay this Amazon video on demand platform. So there is a huge market out there where who cannot afford SVOD but still have a strong desire to watch a lot of quality content which is coming from off the beaten path without any monthly or yearly commitments. So ABC Talkies aims to take the consumer's engagement to a different level through major disruption, and it plans to introduce in the next few years. So there, go ahead, join in. I think Michael will share the ABC Talkies URL into the chat. And from here on, let's begin. Are you ready, Shali? Are you ready?
All yeah.
Yeah. All right. So just walk us through how much money you've raised so far.
Okay, so far, we've raised almost, if in the Indian currency, Indian rupee, almost 200 crores. In US dollar term, at the time we raised, it was $272,000.
Perfect. So this was your pre-seed round, right?
Yes.
So what's the next planned raise for ABC Talkies?
We are looking to raise almost about $1 million for the journey for the next 12 months. That's what we are aiming at right now.
So let's do one thing. While Michael, for the benefit of investors who are on the platform, it would be very useful if you share the DueDash URL link of ABC Talkies. But let's put you on the spot for a brief moment, Shali. Give us your 60-second elevator pitch.
All right. So if you look at India, every year there are almost 3,000 full-length films and more than 5 to 8,000 films that get canned. Not because they are bad, but they have nowhere to go. You know, the buying capacity of all OTTs and DTH put together just can't afford to buy all this content. So the only option that remains is YouTube. And on the other side, there are 451 million Indian viewers who are watching video content but not subscribing to either of the famous platforms that people know of. But it's not that they don't desire good content. It's just that either they can't afford it or they don't want to put in their money into multiple platforms just to watch one content particular. So ABC addresses this problems where, you know, the filmmaker can just come and onboard himself. There is no cost to it. And the viewer just pays for what he consumes. And he gets quality content. So that's ABC in a nutshell.
Amazing. Thank you so much. If you guys have any questions on ABC, feel free to put them into the chat. Let me ask you some I would like you to, you know, take a step back, go back into the early days, and from there to today. How easy or difficult has this startup entrepreneurship journey for you?
It's a mixed bag, I would say, full of surprises, full of hopes, and at times a lot of despair also. At times you have you know, come across various points where you feel, you know, let's just shut this down. It's not working for you. And then there are times where you feel everything is working for you and you start, you know, you got an adrenaline rush and you're running all of a sudden. And
So
those are the times when people like you step in and your hope is just renewed.
So it's a yo-yo effect all the time.
Yes, it is. It is. And
do you sleep well?
Come again?
Do you sleep well?
Don't expect a startup founder to sleep well. Never.
Let me ask you a question here. What are the 2-3 things you know, now you've been at it for a while and you have a wealth of experience in AV industry, in the content media industry. Yet, what do you think are those 2-3 things you wished you had known before you started up?
All right. So the one thing that I wish I knew was that a startup is not an overnight journey. You know, the fundraising process that every startup dreams of, you know, when you have the idea, you think of the fund and then it will be raised. And, you know, 3 months I will show my idea and somebody will put in all the money. It's not going to happen. So had I known this, that it's going to be a long process, there are going to be a lot of curveballs coming. That's something I wish I would have known before I started. And one other thing I wish I knew is that just the idea would not be enough for me. The people, the team, and all is going to play a major role is not something that I knew unless I found my first investor and what he told me. So those are 2 things that I wish I knew. And maybe I wished for a Bible to follow, which I found very late, almost a year and a half down the line when I actually came across this course of 77 steps. And that's the last 1.5 months I have been now actually changing the narrative.
So, I mean, this is very, very interesting. I think you speak from the heart. What's been your biggest failure so far, and what exactly have you learned from it?
All right. So going to the market with a half-baked product. So when we got started just after the pandemic, we were so charged up that we felt we were doing everything right. We put together the product, we rushed into the market, we started speaking to people, you know, and only to realize that everything about the product was failing us. And, you know, that was a point where you thought probably you wanted to pack up and go home because there was not too much to lose still then. But somehow, I don't know what kicked us, and maybe the passion to really get it. We went back to the drawing room, we scrapped everything. And in another 3 months, we actually came up with a product that really made us proud. And it addressed almost every pain point that we had, the last product had failed to meet. So that was a big learning that, what all do you need to see before you get into the stuff. That the startup journey is not going to be as simple as it looked.
So, I mean, that brings me to a very interesting question. So you suffered, let's say you have a penchant for going for punishments, like every other startup founder who's on the Zoom call right now. What advice would you give to the founders who want to pursue a startup, maybe who are still thinking about testing the waters? What would be your advice?
My simple advice is don't be blinded by the valuation game, and don't be blinded or don't let the unicorns be your inspiration. Know the story and the journey behind them and the struggles that those unicorns have undergone. And just remember that none of them became an unicorn overnight. That's something I think every startup founder should bear in mind before he rushes into the thing, because I think the number of startups that are increasing is exponential by the day, and most are basically inspired by the unicorns that they see coming every month. Earlier, it used to be 1 or 2 in a year. Now it's every month that you have tens of them. So that's something I think people should be really wary about. Just don't jump into it.
So what is one common myth then you would like to debunk about startups from your point of view?
The most common myth that I think is that a lot of any business that was started by a few people from a garage is a startup. That's not the case. Everybody thinks Apple happened that way, so I'll also happen that way. You need to do your reality check. You need to know, are you just another run-of-the-mill business which is starting small, or do you have something which is really going to disrupt the market, or you're doing something very differently that people, are you addressing that pain point basically? So unless you have that in you, don't call yourself a startup. It will only, keep pushing you till the point you break, because investors will see through you. That's something I think that's a myth which every startup entrepreneur founder should, test himself on those lines.
So what are the worst resources you've encountered which have been very detrimental for you during this journey so far?
Bad advisors and bad advice. And
what do you
I'm
mean? Can
this,
you elaborate a bit about it?
Yes, so I am saying this from the experience. While we started, we narrated our idea, people got kicked. We had advisors who said, 1 million to raise ho jayega. I mean, say, 1 million is not a big deal. 5 million is also not a big deal. You need to put a deck in place. You need to do a revenue model and this and that and all. But nobody told us how you really need to do all those things. And we probably wasted resources and money, which we could have otherwise utilized in our development part or got better resources for ourselves. So that's something which I realized much later, and I would wish all of you here, if you are at the starting point, please take the benefit of getting into the right platforms at the right time. For us, DueDash was a boon. It's when we started actually benefiting. The first benefit that I got from DueDash was the credits. Every startup is cash strapped, and any money coming in from somewhere is a good point. And I think that was the magnet. And then we started exploring DueDash, and maybe late, but I don't even mind redoing my entire narrative when I'm learning certain things which I never knew.
I mean, this is amazing. Shali, you talk about it. I recently read a very interesting tweet. It was that if there was $1 for every bad advice, a startup would never need to raise capital. Because you would be
just come again. I actually got distracted by a very interesting question from Stefan. Do you want me to answer it now, or can we?
We'll take the questions later. We'll definitely take the questions later. But
Okay.
then in that case, what have been, so you already mentioned that DueDash has been there to help you. You talked about the free resources. So let's get narrow down to the 77 steps course that you've been actively pursuing. That is one side of it. So that was a resource which helped you get there. Michael, maybe you could potentially help people with the pointing to where this exists on our ecosystem. But what about your IR platform? How did that help you?
Okay, so we've been doing all these pitches. I think this will answer Stephen's question also. So we felt, what we are narrating is the perfect thing, and this is all that we need to tell people, and they should be investing into us. And we kept, running it through and through. And believe me, till about last month, till about Jan, I was always getting a negative feedback on my pitch, in the sense that people mistook us for an OTT, always. Though the pitch said everything, that this is a marketplace and everything, and I don't know what to do about it. So after in that period of time, we became more active on DueDash. We started filling up the IR profile and everything, and that's when we learned. When it took us through all the steps, is when we learned that what narrative we should be speaking, how we should be speaking it, and how we should start looking at things. And that's where the change started happening. And believe me, the maximum change in my narrative has happened in the last 3 months. Though it is late for a startup to do that, but we are still evolving with our pitch. We are still evolving with our elevator pitch. It's improving by the day. Once, now that I'm halfway through the course and I've skimmed through it, but now I'm getting into the deep dive, and it's changing by the day, believe me.
So I think it would be a good point to tell everybody that, in case they decide to join ABC Taki's platform, what they could essentially do is they get some credits, right? Watching credits.
Yes.
Yeah, go ahead, talk
Yes.
about that. This is your chance to, get people to experience ABC Taki's platform.
All right, so I would invite everyone to get onto the platform, experience the diverse content that India has to offer to the world. It's not the only blockbusters that India produces. There is some very amazing content that independent film producers are doing. Even students are doing some amazing work. And ABC intends to become a face, a staffing platform for them. And when you sign up, it's not the free credits, but it's a kind of motivation to all those filmmakers, because when you use those credits, they get paid. So I would invite you all to just join in wholeheartedly. Give us your comments on the content. We are improving by the day. The more the merrier, better quality will start coming in. So please join in. I think Marcus would have shared the link. Michael would have shared the link with you guys. We are on Apple and we are on Android. So the apps are up there for you.
So thank you so much for this, Shali. I have one, let's start diving deeper into the course part of it and the 77 days to investability. How did you feel while going through the course? And just walk us through the whole process. I'm sure, there are tons of courses out there on YouTube. You could just, there is Coursera, there's Udemy. You could just do a search string like, teach me how to fundraise on YouTube. Probably there'll be 500,000 courses out there. Tell us a little bit about how you felt going through this process.
Okay. I'll tell this in a line which I have been using with my previous organization also. A lot of people know what to say, but it's not important what you want to say. It's important how you say it. And in that context, when I look at the 77 steps to investability course, is when I started realizing, because upfront over the entire last 12 months, we've been saying you should have your TAM, SAM, so you should have your product roadmap, you should have business plan, you should have sales plan, you should have a funnel, and all technical jargons that came across. But and all the advisors, when I said bad advisors, it was a checklist that, they sent you across and they asked you, okay, give us business plan, give us this. I said, and that's where we were struggling. Nobody told us how you should go about doing it and why you should go about doing it. Why would it be of interest to the investor to know this? From which perspective? And these two things put together, the why and how, is what is helping me change my entire narrative, my entire way of looking at my own business. And in fact, believe me, till about 2 months back, we were probably, we had a wrong definition of our customer.
So it has been very transformational for you in that sense.
It has. Without mincing words, I would say it has. And I think by the time I get through it, we would have transformed. I think our way to getting investments would be much better, because we will be able to show our value much better. Not just put it together, but I think we will be able to reflect the real value that we are bringing in.
So in that regards, what parts of the course specifically have been extremely easy for you, extremely difficult for you? How much time have you been spending on the course, and how you've been consuming that course? Just walk us through that, because from a creator standpoint, so what we've done is we put in all 26 years of our experience in that, right? And
yes.
But this is my opportunity to get the feedback. First time I'm getting a feedback from a consumer who's consumed this. I'm sure we have passed our initial launch benefit, but I think for the benefit of everybody who's on this event today, I think, Michael, would you be kindly extending the benefits to the consumers, to the viewers, to our audience? Yeah. So coming back to you, Shali, I think while Michael will do it on the chat window, but tell us a little bit about, I probably asked too many questions in one question.
Okay. So for me, while I'm half the way, what I loved, so there were some portions which I already had my answers prepared to, which I was doing. But then there were portions where I found myself in a complete no man's land, which really were an eye-opener to me, like a mirror, and at the same time like a path in terms of how I should be addressing it. The two particular sections that I have liked so far. First is the market opportunity. That's the -2 part of the course, and that is helping me redefine everything, rather. And that probably I think is very important for me or for my startup, because at the end of the day, I think the investor and if I'm able to articulate it well and I'm able to articulate it right, there are two critical points. And while doing that, I realized that I need to look at the bigger picture than the smaller one where I was targeting, and where probably I would have failed also. It showed me a completely new market opportunity, or probably the right opportunity, which which we at ABC Talkies were missing out on. The other part is the product roadmap. So when we started off, I remember I would go back to our very first call somewhere back in October. And I remember, we used to spread ourselves so thin, giving a, 10-year picture that we do this and this and this and this and this and this. And it was like an endless ecosystem that we were doing. While it was good, but there was no roadmap. It was all scattered. We'll do this also, we'll do that also. But that product roadmap is helping me put things that, okay, at what point of time, which feature am I going to bring in? How it is going to arrest the downward curve of my product, and how I will, come back. So any product, needless to say, everyone here knows that every product there is a cycle. It goes up and down, it goes up and down. So the moment it starts going down is where you need to innovate. And that roadmap is helping me put things into place where I know, where I will have to pivot, where I'll have to change it, where I'll have to bring a new feature, or at which point of time it will be right to introduce the disruption. So far that's been, I'm sure when I go through the entire thing, it's going to be a game changer.
So what have been your favorite parts so far, and what have been your worst, your nemesis, if I may say so, for lack of better word, throughout that course?
Okay, the favorite part, I've been enjoying the entire course. I wouldn't say there is anything very favorite or not. Why I said those two parts is because they were addressing a big problem that I was facing. But what I love about the whole thing is it's short to get yourself an introduction. But if you are a serious player, each of the section is worth giving time to it, and that time that you will need to give behind each section, answering things which are very, very structured, is probably going to help any founder, in his journey to getting his product and his investments both addressed.
So tell me something, has it helped you tackle any curious situation in front of the investor already?
Yes, I would say in the latest round that we are trying to raise, it has helped me get a better leverage with the investor when I'm talking to him, because now my narrative is changing. In fact, our entire pitch deck has undergone a change, and it's become much clear. It's become much, I would say, to the point and precise to get the message across and get the interest going. It's still evolving. I think the pitch deck thing is something that keeps evolving. If somebody says I have the final pitch deck from day one, I would disagree with it.
I totally agree with you.
I've always been happy at the stage I was, but now I'm more happier.
Okay, so which means that if this is already started putting together a very strong narrative, and it is backed by, and I mean, I'm just trying to correlate it with the investor relations platform, because what it effectively does is you have the knowledge and you have the practical application of knowledge on the IR side. So what it essentially does is that it basically allows you to convey, as Dr. Ashwath Damodaran, and I love this because that was the whole philosophy behind DueDash, that he said every numerical value in your startup has to have a story behind it, and every story behind your company has to have a numerical value to it. So this amazingly brings both of these aspects together. Unfortunately, I mean, this is from an investor standpoint, and I've been judging so many pitches. Even today, I was in a session, and I recognize people so quickly forget how they are so deeply correlated. You know, what gets the attention, what gets like, okay, cut the crap, move on. Yeah. So I would love to have your point of view on that, and how it has kind of, worked together for you in that sense.
Very difficult question. So could you just rephrase it in a more simpler way for me? I'll be very modest.
So you've been talking about, you've been learning the course, right?
Yes.
Right. You've been going through each and every element of that course. On the IR platform, whatever you've learned, whatever you do, it gets you put it in your data rooms, you put it in form of questions, you put it in what correlation. So on one side, you learn the how to set up your story, right? On the other side, you are setting up the numerical values associated with your story. So what has been more difficult for you? First question. The second would be how you are trying to benefit out of it.
All right. So this both are very closely correlated in the very first place, because the IR platform is not the difficult part.
Okay.
It's basically you're feeding in everything. It gives you a very structured thing where you are best able to present your startup, right? But the thing that it is asking for, you're not ready for a lot of parts of the IR platform. You're not ready. When you start really filling in and you realize, okay, the investor is going to need this, is going to need this, I don't have it. Okay, while I don't have it is okay. I know that I don't have it, but how should I be going about it? What, why is a business plan different than a sales plan and a marketing plan and a go-to-market plan? And I don't know the difference. Because I had a business I was already running and I didn't have to worry about all those plans. So how do I go about doing this is where this 77 thing comes in. It helps me answer everything that the IR needs. So it's in a way, it's totally closely related, because I started realizing I don't have a lot of things when I started filling in the IR. And then I started realizing that, okay, the answers should come, I should be able to now answer those requirements. While I'm going through this course, I'm realizing that, okay, this is how I should look at it. This is why I should look at it. And this is how I should go about structuring things. Or in fact, for the benefit of the audience, it's never too late for anything, I would say. It's a tough thing. We are going to burn up all our first investments. We have a limited runway left. But at this point, we have decided to do another market research, which usually you do it before even you start your development or anything. But better late than never. After seeing all this, we went ahead. We have commissioned another market research for ourselves. This time with a new narrative, with a new target in mind. So this is what the course has done for me in very simple word. And it's as I said, it's correlated. Anything in the IR platform which is missing, you will probably find it through this course. If you answer it, you go through it, you will probably have a complete profile for the investor ready, which I think it's a growth stage. We are not at a stage where we are talking, raising a couple of 100 millions or something. The IR platform is capable of, getting you to that stage. That's what I felt. So maybe you're not completely, able to answer everything in the IR platform, but it still lets you do what you're supposed to at different stages. So I think it will take us some time to fill up the entire IR platform and all the data rooms that exist over there. But that's how it is.
So that's fine. I mean, it's a continuously evolving process. So that's so at what stage? This is going to be my last question before I throw the floor open for the audience to ask you questions which they feel very strongly about. At what stage should people go through this course, and what should they do course and the IR platform bundled together so that they have a much bigger vision of what is effectively going to come and hit them throughout this journey?
Well, see, as far as the IR platform is concerned, any startup should do it from day one. And as far as the 77 steps course is concerned, don't waste time. I have been cribbing about it. I have been regretting it. Why did I not have this? At least 7 to 8 months before, it would have helped me a lot. I would have got better investments much ahead. It's a bit scary, let me tell you, Nikhil, on your face. But I would say don't get scared by it, because it gets the best out of you. If you take it in the positive sense, it gets the best out of you, because that's the reality of life. You might wonder at some point that, this is just too much for asking. But as I said, if you are able to answer all of it, you are even ready for a 100 million round, because that's the kind of detailing that has gone into it. So even if you don't get everything right, you will be much, much, much better prepared. So I think for my advice to any founder out here, just take the benefits. Getting on the platform is free. There's no cost to it. Yeah, opt for the course while you are on the platform and you have a big discount. It's probably not even your subscription to any of the services. It's less than that right now. Don't leave it. You just can't be missing something that's peanuts, cost of peanuts. And I think it's years and years and years of experience that has been put over there. If nothing, just go through it.
Thank you so much. Thank you. We appreciate it. So now I think it's time for us to move on to the next section, where basically audience throws questions at you, and you're in the hot seat of the audience. perhaps this is a good time to reiterate, that people should join ABC Takis, claim their credits, and watch the off the beat and track content. And it's not going to kill. I mean, I think the numbers which you were talking to me about your subscription, or not really subscription, but the way you want to monetize it, I think that's not even a cost of a coffee. So well done. Perhaps Michael, can you share the link once again, and then let's go with the audience questions. And anybody who wants to ask question, please unmute yourself and ask the question directly to Shelly Bhadra. I'm not going to do it for you. And announce your name first.
Hey, hi, Shalbhadra. This is Shubham from Jamsri. I'm a bootstrap founder of Jamsri Technologies and Audit GM. I've been into the same situation which you have been in a couple of months back. So currently, we are launching a deep tech product for the global market, and that's the kind of feedback which we have received from the ecosystem of VC firms, that the pre-revenue stage, it's a bit skeptical, and it's not the comfort zone for majority of the VC firms, to put the money in. Though you have a very good beta users, the brands of India, but still that revenue is something which is a pain point for most of the startup founders to generate in the very first beginning. Though we have a 2 CR ARR on the services business, we do have 100x.vc as our client, 2MVC as our client, but at the same time, when as a founder, I look at all those fundraising perspective, because I have not done those things in the past. So it's a bit scary. At the same time, it's a bit skeptical also that do we need to approach in the pre-revenue stage or not? So what's your thought on that?
I think, no stage is a bad stage in the first place. While so I have also faced the same situation as you are, and I'm pretty sure you got some angel funding to help you stay afloat, and the same is with me. And at the same stage, I have come across exactly the situation that you are undergoing. But I would say I just want to know from you whether they are lacking something from it, or it's just the excuse of you are in a pre-revenue and the numbers are not saying for you.
No, I think they're not excusing it about. So we are talking to like Nexus and Sequoia these days, and we have just launched the company 1 month back as a separate wing. And now this is the stage where we will be hitting revenue of more than 200K on a monthly basis, like MRR, in the next 2 to 3 months. But the product is still in beta, and we do have some pre-orders for it, but still going to the investors and convince them that, hey, this is what is going to happen. It's just everything is oral, nothing is documented, So what should be the take? Yeah, Mr. Madan, if you want to answer.
Shubham, I could help you there, in the sense that you're going to Sequoia at this stage is absolutely there's no way why you're even bothering. You're wasting your time there. You need to be very mindful of the thesis of the investors and at what stage. And if somebody says that I invest in pre-seed, pre-revenue companies, then those are your investors. Yeah, they would be more involved investors in the beginning who would, and they might ask you for deal terms which may not be favorable to you, but because the heavy lifting gets done here, so choose your investors wisely. There's no point going to Sequoias and Lightspeed at this stage. I don't see any value. You're simply going to be wasting time and suffering.
Thank you, Madan.
I would agree with you. I would agree with you, Nikhil, and that's what I was going to tell Shubham, that don't go to the big wigs. This is just not the stage.
Right. Okay. Let's move on.
And that's where I think I would say, Shubham, I'm sure you are on DueDash. And
DueDash, I'll definitely explore DueDash because I just learned about it today, and I'll definitely explore. I was just listening you out, so it's the next step for me.
So you will find a whole list over there. I am still to apply to all of them, but I was surprised by the whole list, and it has independent investors also. And I think Nikhil and Michael both they've been doing me a good amount of handholding. So I would advise you to explore it.
Indeed. For sure. Thanks, guys.
So there was one question, Shali. This was a question from Suyash, and I'm reading it out so that, just to make sure that we get as many questions in. On a big paid OTT, there are good and the bad content, and you pay for it all. And for ABC customers, since the customers are paying for each and every piece of content individually, don't you think people will lose it when they have to pay for a bad movie individually?
Yes, that could be the case. But then you look at how much are you losing? A lot of the movies are in the range of 10 rupees, 20 rupees. Today, when you're traveling by a cab or an auto and, that says 10 rupees extra, you don't even think about it. So that the amount of risk that a person is likely to take is too low. And that's where the whole comfort level is, the price point at which different quality of content is available is what people are willing to, pay for. So while we run the risk, but at the same time, there is a comfort level with the audience. I did not lose 199 rupees for the content, or maybe 490. I didn't end up paying the whole subscription, and I just wanted to watch one film, which turned out to be bad.
Perfect. Any further questions? I think any further questions? Okay. Yeah, there's a very interesting question from Abiral Khatri. This is from a socio-cultural perspective. And Abiral, I think you're from the subcontinent.
Yeah, I'm from Nepal actually.
So go ahead, ask your question, Abiral.
Michael as well. Yeah, so basically I represent this public-private partnership projects and working between the intersection of government and private sector. I'm also a social entrepreneur. So my question is also a bit kind of coming from the societal perspective. So basically, I'm curious about your experience, like living in a collectivist society like in India. Like what's the role of, support groups such as family and society, and how do you break that, let's say in a way, it's kind of I don't know, that, like mostly our families, they are like, they want to see us as like doctors, engineers, and this is like quite a trend in the South Asian region. And so how do you convince them, or, because they play a really huge role in our lives. So how do you take them along with you, like in the, in your journey, and whether they compliment you, or like, how do you make them as a support group? That's my question. And what advice you'd give to entrepreneurs, especially in this region?
Okay. So I think Nikhil, you and me are the best suited people, as me specifically. So Abiral, I did not undergo that kind of, wall or a resistance, which I would say currently just about 75%, 25% of India is transformed to give the freedom, which I've done for my own son. Midway into his 12th standard, almost towards the end, he said, okay, now I don't want to do architecture anymore. I want to go into, something else. I said, fair enough. You can just shoot down that, whatever you paid for that course, we don't want to worry about it. More important is where you want to go, you start planning for it. And that's where we went about with it. He planned on his own, and he's got into a dual degree course at one of the most reputed institutes in India. But having said that, at least the Indian entrepreneurship society and the family mindsets are changing by the day. I have come across a lot of families where they have not insisted on the family tradition, while a lot of places I have come across where, the doctor's son is a doctor and an engineer's son is an engineer, or people taking a father. But there is a transformation happening in the Indian society, especially. I'm not sure about Nepal, but probably I think the trend continues from the bigger nation to the smaller nation, and that's how it's going to happen.
Yeah, definitely.
It's changing to a very large extent.
Actually, last week we had this international entrepreneurship event organized by the Indian Embassy between the entrepreneurs of Nepal and India. So such events are really helping, especially from the government level, to break the barrier and have this new generation of entrepreneurs, like facilitating them with such platforms.
Perfect. Thank you.
By the way, we have a few Nepali films for you on our platform.
Oh, great. Okay. Thank you for your answer. Thank you for sharing. I appreciate it.
So, so there is a very interesting feedback coming in from Santosh. Santosh, why don't you ask the question directly instead of the chat? Maybe this also gives you an opportunity to highlight your point of view.
No.
Okay, so I'll do it for Santosh. He says that he just installed the app, and with the initial exploration, I feel per month subscription cost is cheaper than the bunch of individual movie cost. Just a suggestion, few free movies might add more viewers. That's what he's saying. So
Okay.
what's your take on that? I'm sure you have a very good answer.
Yes. So while a few movies, we will surely be bringing in that. We've been doing it from a couple of times earlier also. But because we are supporting filmmakers, to earn money and to earn good money, that's one of the biggest pain point for the middle filmmakers when they try to go to OTTs. Because most OTTs are subscription based, they are not willing to pay them the right price for their creation. They want to buy it at a dirt cheap rate because they've already spent their larger chunk of money on the blockbusters which get them subscribers. So that's the reason why we have abstained from the subscription process, because once we go into subscription, we cannot pay the filmmaker the money that he asked for. And the platform allows the filmmaker to fix his own price. It basically reflects the confidence the filmmaker has on his own content. When he prices it higher, he should be confident for it. So I think we are trying a completely different behavioral change. It will take some time, but people will accept it, that rather than buying subscription and just watching endless content and
Whatever
getting
the-
addicted to it. Yes.
Yeah, whatever gets thrown at you. Yeah, and of course, there's a huge sense of community in this whole process, that underserved, underrepresented filmmakers also get a voice and be able to monetize that. And with that monetization, they are more incentivized to bring out way more quality content as they go along. So I personally feel over the period of time, their ability to monetize this whole thing will allow you to bring in way more quality content at a much more affordable price. So great.
Nikhil, one point I just wanted to add for an experience that I have shared. So the addiction of subscription, sooner or later, I think there will soon be a report and research about the entire productivity lost to the nation because of subscription platform. The binge watching that happens when you start, a series and you are watching it through day and night, only to realize you lost your productivity during the day, and you probably lost out on a big opportunity because you were binge watching the previous night. I'm sure a lot of you might have undergone that at some point of time, not every day, but I think there will be a research report soon, soon, telling what is the productivity lost to a country like India just because of SVOD.
So, but look, this is not just to India. I can tell you something. There are so many apps out there which allow you to calibrate your subscriptions and decide where and what you want to, how to cut down your costs. It's a huge drain, even in the Western world where the affordability is slightly higher. Having said that, I don't see any further questions. So what I'm going to do is I'm going to hand it over back to Michael. But before I do that, any final words, Shali, would be very from your side, and then hand it back to Michael. And if there are any last minute questions, guys, throw them in right away.
I would like to thank everybody here, because I see some of you have already installed the app. That's very, very inspiring to me and my team. And thank you, Santosh, for the honest feedback. It goes to show that you use the app and you have something to say about it. Thank you very much. I'm sure others might have done the same, probably. And I look forward to all of your support to help us grow. Thank you for the opportunity.
Thank you. Thanks.
Thank you.
Over to you, Michael.
Yeah, give me a second. Let me just pin myself here back on this one. Right, so just for you all, I also put just like the link here in the chat, both of the course and of course also for ABC Talkies, check that as well. Now, just for before we kind of close the session, this is just the first of many sessions that we're going to do, focused really on how to build an investable startup, on how to actually deal with investor curveballs. So today we took kind of like more as a general view, but we're going to, in the next sessions, we're going to always have a certain topic. With a topic, I mean like we're going to focus down on different aspects on what we also cover in the educational course, the different dashes. And these dashes and also the different topics that we cover are always focused on what investors ask you. Because at the end of the day, all these questions, all these curveballs, they ask you because they want to understand if you build a proper business and if you can scale, become investable and succeed. So we're going to cover each month a different topic. And in the next month, we're going to cover the topic of why. Basically, investors want to ask you, why are you becoming a founder? What will keep you going? What is the need, the reason behind the business? So that will be the topic next month on the 27th of April. So that will be at the same time. So it will be 5 p.m. CEST or kind of like 8:30 p.m. IST, 11 a.m. EST, depending on your time zone. So that will be the topic. And for the guest, oh yeah, Nikki, you wanted to add something? You have to unmute yourself just to do that.
Just wanted to make sure Stefan has asked a wonderful question, and I think I would like you to spend a couple of minutes on that. So thank you, Stefan, for this question.
The brand name. Well. So
you first complete what you were saying, and
yeah. So just for completion, so the next topic, like in 1 month, said will be on the topic of why. So we talk about all about as it's mentioned. Our guest will be another great founder. It will be here just Varun Goenka, who is the CEO and co-founder of ChargeUp, who's working on powering EVs. And yeah, just gonna mute you. Listen, yeah. And just to your question, Stefan, where's the brand name coming from? Actually, we have a video done in the past because we had a different name in the beginning. And even before that, we had some previous names. So the previous name, I'm not sure if anybody of you can spell it. I'm just gonna put this into the chat, right? So I give you a second just to think what you think that would mean. That was the previous name. And if you guess something like QET or something, that's something that most people think. Actually, it would have been QAD, but because nobody could spell the name and nobody understood it, what it actually means, it stands for like quod, came like from quod erat demonstrandum, because my dear friend Nikki here also likes math and Latin, but that was too complicated. So in the end, we created DueDash, and DueDash, if you think about from the name, it can also be from due diligence, dashing to investability, setting due dates for your fundraising. So it has a couple of different meanings very related to fundraising, investor relations, which are quite relevant. Wolf, yeah, put in queue. So that's on that. And yeah, Marcus, anything else you want to add on the name, just in case you can still talk? Just checking in.
I mean, that's what it's all about the due diligence process, because the big differentiator between us here at DueDash and many other platforms that you would see out there is for us, the engagement and the interactions with the investors is at the forefront of what matters most. A successful fundraising ultimately is just a result of you being able to engage properly with the investors. And that's what DueDash is all about, helping you to prepare for your due diligence, guiding you through the process, and also managing your investors after. And again, it's a dash to investability, as the course also says, because we're accelerating this process for you. So yeah, that's just a short input from my side. And thanks a lot, everybody, for being here today and asking all your questions. It was wonderful listening in to you as well.
Wonderful.
Thank you, everybody. And Michael, will everybody receive the code in their emails? Just
yes.
talk about that.
For all of you, if you're missing, you get a follow-up email tomorrow. Now also with a code, but just check in the chat. You can do it now already. And then, yeah, we will see you all even 1 month at the next Startup Lounge session. And we also have the Investor Lounge where we invite investors. For those of you who invest in that will happen in the next session in 2 weeks. So just write us on that. Yeah, leave the last words to you, Nikhil, for closing.
Thank you so much for participating from wherever you're joining in. I see people coming in from India, which is, I think, nearly, I see some Ritu coming in from Singapore. So thank you so much. This is past midnight for you guys. Much appreciated. Join us, enjoy, and don't let fundraising be a burden. It's easy when you do it right. All right, good night. Thank you. Bye-bye.